Hey everybody, Tom Gentile. I want to welcome you to our session 3. This is week 3 of our Trading Essentials summer webinar series. Glad you all could make it. I promise you I'm not going to waste your time tonight. I don't think I've wasted time, Jay, the last couple weeks. In fact, we've done quite the opposite. We've given opportunities, and it's just, this is one of the best times of the year when everything kind of stacks up when you look at patterns. This and then also around that November, that end of November, mid-December timeframe is a really good pattern season too. But I gotta tell you, I love this time of the year. I really do. Sure. I think we're gonna get a little bit volatile for the next couple of days. I think. But yeah, look at that. Otherwise, I think we're gonna have a really great end of the month and going into the beginning of July. And Jay, you know this because you follow this stuff.
Absolutely. Hey, Kathy's typing in. She goes, "No time wasted. She made money."
Awesome. I mean, that's the whole reason we're here. This isn't some club where we all, sit around and talk about anything but how to make money. That's the plan here is to talk about this and really learn how to do this as a side hustle, as an income. Whatever it is reason you're here for, somewhere in the area of making money, it's got to be some of it. Is knowledge, obviously, but to me, you got to learn to monetize your knowledge, and that's what everyone's here for. So I'm going to get started. Look, guys, session's being recorded. I'll get the recording out to you as soon as possible. Number 2, ask me questions. I can't guarantee I'm going to answer them all because we just have such a crowded room tonight. And then number 3, disclaimer on the screen. I'm not going to read the whole thing to you, but I want to read 2 sentences real quick. Number 1, that's the big bold one at the top. Stock and options trading has large potential rewards, but also large potential risk. Then there's one in paragraph 2, where myself, Jay, everyone associated with Optionetics and Tom's Trading Room, we are here as your educators. We're here to show you how it is we trade. We're not investment advisors. We do not give specific trading advice. All right, specific is one-on-one. You need a broker to do that. Also, everything we're going to talk about tonight is in U.S. dollars unless noted otherwise. All right, you can read this in its entirety on the recording. All you got to do is just hit pause. All right, so let's kick this in high gear here. Tonight, I want to talk about the triple threat trading strategy, trading like a rules-based trader. That's what RBT stands for. Plus, my $200,000 cryptocurrency giveaway. Jay, I made a goal at the beginning of the year that I was going to give away $200,000 in cryptocurrency. I've already given a lot away, right? Okay. Some of our partners know this. Some of our members and our past members know this, but I have decided to double that number. So that's why it says plus my 200,000. I'm adding that on top of the 200,000 I already have. So that's kind of my goal. All right. You might wonder, why am I giving so much cryptocurrency away? Well, we're going to get into that. All right. I've had a good year. I've had a fantastic year plus in terms of cryptocurrency. So I have some. We'll get to it. But I want to review last week's spreads with Amazon and Google. They're doing well. I want to talk about the 1030 crossover, which is how we got to the triple threat trader. All right. Everywhere we are now starts with some sort of story in the past. I don't want to spend too much time on the story, but I want to at least give you the fundamentals of how we got to the triple threat trader. I want to talk about how to create and backtest a rules-based system. And of course, I'm going to end this on my once a year trading systems mastery program. All right, this is our 5th year doing this. I only do it once a year. This year, I've got a lot more than we started with 5 years ago. All right, we've got some really cool collections of trading systems, and what's even better is we've got apps this year that we didn't have last year. And so I want to, talk a little bit about our apps as well, which work on smart devices. So really cool collection of things, and obviously the best offer that I've done in 5 years too, because this might be the last one of these that I do. All right, I'm not a spring chicken anymore, and it takes this program that I do once a year. It literally takes 2 months of my life, and I take it away from most everything else that I do. All right, because I commit those 2 years to this small group of people. I'll get to it. Let's get to some what we discussed in the last couple of weeks, and we'll talk about the triple threat trader. We'll talk about the system mastery program. So guys, what I've really been trying to show you over the last couple of weeks is that there are different trader types out there. All right, there are discretionary traders. These are folks who use intuition for their trading decisions. They think and they hope. They think something's going up and they hope it's going up. All right, thinking and hoping are not part of our strategy base here. They're not part of creating a system. All right. Now, I say this because I have been in this position. Okay. I remember where I was in this position. I was in New Jersey. I started trading out of the basement of my parents' house. That's how long ago I did this. But I was in the thinking and hoping part in New Jersey in a small home that I purchased. It had a little loft upstairs. That was my office. And I remember having a compact 286 or 380, I think it was a 286 computer. This thing was the size of it was like a book, a big dictionary. I think that you could have thrown this on the ground and it would not have hurt this computer. It's not like the computers of today, but that's where I started really getting immersed in the markets. And I unfortunately went down the discretionary route. Luckily, I got out of it fairly quickly too. The fundamental trader is one that there's nothing wrong with fundamental analysis. I actually use it. There are systems and strategies that we use fundamental analysis with. Most definitely earnings, all right, revenues, and we look at patterns of earnings and revenues, and we look at patterns of implied volatility. These are all based on fundamental information, right? But I believe a fundamental investor, most fundamental investors are just that. They're investors. They're not traders. They're in it for the long term, right? Now, let me just tell you this. I am also a fundamental investor. I have a handful of stocks that I am in for the long term. I don't just trade options, right? But people who are traders, if they can get out of the hope and the thinking and hopium part of trading, tend to go technical, because technical is something you see on a chart and you use charts and indicators to predict the future. But a lot of people don't fully back test the methods. They eyeball them. They eyeball stochastics and they go, wow, that is fantastic. Where have you been all my life, indicator? And what they don't realize is that that's a lagging indicator, and that indicator, by the time it actually starts pointing up, stock's long gone, vice versa. You really need to move on to what we call a rules-based trader. A rules-based trader is a pattern trader. And whether that pattern is technical or fundamental or seasonal or volatility-based, breakout-based, trend trading, support and resistance, whatever it is, you need to be able to research it. You need to be able to create a set of rules for it. You need to be able to back test it with quantifiable data and then forward test it after that. And then finally, trade those rules only when you're confident in the results, both back testing and forward testing. All right. What did we discuss with you over the last couple weeks? Yeah, we discussed Darknet. We discussed Money Counter, both two rules-based systems. All right. Let's roll into those real quick. So I want to start with Campbell Soup. Here's Campbell Soup. A couple weeks ago, we were down here in the high 30s, and then pop, the lid came off on the soup. The soup was hot. The soup went from the high 30s to the low 40s, mid 40s. It's cooled off a little bit. That's what happens to soup when you leave it out for a long time, right, Jay? Cools off. The market's been blowing on the soup. The good news is that last week we saw at the money options, call options, that were up 60, 70, 80% with that little move there. Cooled off a bit, but still up very nicely. All right, that's Campbell Soup. What's the other trade we had? We were looking at HYG. Let's take a look at HYG. HYG. Here's another one. A couple weeks ago, moved up, leveled off. Today, another jump up. All right. This is the iShares high yield bonds, high yield correlated bonds. All right. This goes up when bonds go down. Guess what happened to bonds today? They opened higher and they started to close lower today. In fact, I look at the 30-year bond on one of my other screens that you cannot see. The high was 155.30. It closed at 155.03. It was off almost a full point today, and that's what pushed this a little bit higher, right? Call options, again, moved up nicely. Now, what did we discuss last week? Last week, we talked about spreads. We talked about the ability to get into higher dollar trades like Amazon and Google, and those were the two case studies. We talked about JP Morgan too. We talked about Netflix, but the two that came up that we took from the beginning, from spotting the opportunity all the way to creating that low risk trade, were Amazon and Google. We'll take a look at them both. Those are two trades that, again, AMZN, let's take a look at it. And you can see this is not a cheap stock. All right, this is a $1,900 stock. Last week, it was an $1,860 stock. All right, but now it's gone up a bit. It's gone up as high as 19. It was up to 1920 today before pulling back a bit. And so Amazon has padded my pockets quite a bit the last couple months. And even with this move down, it allowed me to get into a trade. Actually, I think I got in up here, and I suffered a little bit, but then it came back. But Amazon's done very good for me as a pattern trader. Obviously, we see this move that goes from the 1850s up to about 1900. That's about a 50-point move there in the last week. Is that going to do well with call options? Yes, it is. Is that going to do well with call spreads? Yes, it is, but maybe not as much, because when you're doing a call spread, you're trying to take something that's $1,900, $1,850, and reduce it down to, where were we at? We had $222, all right, was the trade, $2.22 to control an $1,850 asset. All right, so here's the Amazon trade that we had on. If you remember it from last week, there it is, buying the July 19th, 1950 calls, selling the July 19, 1960 calls, and this was $2.22. And I said, yeah, $2.50, you know, a limit. Where's that right now? This is as of the close of today. This is up about, well, you add on a little bit, it's up $108 right down the middle. So you can see here that the trade was $28.80. That was the call options you were buying. Well, they're up to 30 by 31. The calls you were selling were sold for about 26.23. They're 26 by 28. There's a bit of a spread between the two of these, and that's because you're looking at something that's closed up already. So as you get to the end of the day and the closing prices happen, those tend to widen out a little bit. But this is is moving in the right direction. This is a trade that we need it to mature. All right. What I mean by mature is we need to get closer to July 19th. I think what's going to happen is we're in the third Friday of June right now. Everybody, all the procrastinators out there for Amazon are all sitting on the June options looking at them. As they get past June, then you're going to see the crowded trade is going to get into July 19th options, because that's where the money goes. It typically goes into that third Friday of the month. And it goes into the weeklies too, but most of the money on the majority of options out there go into third Friday options. That's why I love those so much. All right. Now, here was where I'm pointing on my map. Here's where the highs were earlier this year. It was around April. We saw the high on Amazon around 1977. I believe that we are going to get at and above that number. I think we're going to be in the $2,000 range very, very soon. And everyone's going to be talking about Amazon and how great it is, $2,000, trillion-dollar company. That's when I think I want to move to the sidelines, all right, when it becomes front page news, and it will, all right, because that's what the crowd does. The crowd, you know, it's no guarantee, but when you see the same thing happening over and over again, it's hard to do the opposite. It's hard for me to do the opposite of what the crowd psychology tends to have happen. And that's what we're seeing here. All right. You're seeing China, you know, are we going to do the dance or are we not? You know, are we going home early? You know, that's kind of what we keep seeing here. Trump and Xi continue to get together and get apart, and get together and fall apart. I think that in the country's both best interests, the deal's going to get done. But then what's going to make the market move higher? I don't know. I just think until that deal is still kind of out there, I think that's a great positive for the markets. When the deal's over, then I start to worry and wonder where things are going to go. But as a pattern trader, I don't need to worry about that too much. Right now, I see us going into the middle of July and things look good based on what they've been doing for the last 10, 20 years. Amazon. So we see a nice little profit there. The other trade we looked at was in Google. Now, Google at the time, let's go take a look at a chart of Google, or Alphabet, excuse me. Old habits die hard, don't they? Alphabet, also in the last week, has gone from about 1080 up to, well, the high was almost 1120, and then it pulled back and it closed at around 1105. But we're already halfway to the goal line with Google. All right, so we get another run like that, we're going to be up in that 1140, 1150 area, which, by the way, we looked at last week, the 1130, 1150 spread using those July 19th options. Here is the trade, July 19. You remember buying or being long the 1130 calls, selling or being short the July 19th, 1150 calls. Doing this for about $5 or less. It was actually coming in around $4.85. And as Google has gone up in the last week, this is up about $155 per spread. All right, we were in this area last week, and now we're up here. We've moved out a little bit. We've got a little bit of a profit. Remember, maximum profit on this trade, if we get to July 19th and Google is at or above both strikes, then we could possibly see a profit of over $1,500. Amazon, I didn't show you this, but Amazon, if we are at or above the strike, the sold strike there, 1960, there's a potential to $743 profit on this particular trade. So they're both higher reward, low risk trades. All right, this one is a 289% reward to risk ratio, and the Google trade is a 3, better than 3 to 1. All right, 3 parts made for every 1 part lost, and so that is the Google trade. All right, so those are the 2 trades that I wanted to show you. And where did we find them? Again, we were looking at Alpha 9 on week 1. We were looking at the money calendar on week 2, both available in our tools, in our tool set. Alpha 9 / darknet channels, because it's one and the same, is found in our Contrarian Trader product. And money calendar, we also have money clock, money holidays, all different search tools are available in the complete trader package. I'll get more of that as we move along. So let's scroll back. Again, rules-based trading, research, back test, and then trade. That's what a rules-based trader does. Now, let's talk about my favorite indicator, all right, or my mentor's favorite indicator, which then I did some tuning to and created what I believe is a really great trend trading system. Now, let me look at, I've got the Q&A board here lined up real quick. And the reason I got it lined up is because I want to ask all of you a question. So Jay, I'm going to need you to pop on in there. And you know what? We talked about Netflix last week, but if I'm not mistaken, we looked at that. That wasn't my favorite trade. And so although we queued it up, it was like JP Morgan. We looked at Netflix, we looked at JP Morgan, but the 2 that we really that surfaced to the top were Amazon and Google. All right, but here's my question to you. How many of you in here right now use moving averages? Use moving averages in your trades, and possibly the 1030. Possibly. Wow. You don't even have to answer, Jay.
Yeah, it's almost unanimous, isn't it?
gosh, look at all these moving average traders. Unbelievable. All right, so I want to go through, for those of you that say no, or that don't know what this particular moving average is. Most of you do. Most of you do are George followers. I know you guys. You're George followers. Look at that picture, Jay. I mean, man, I was a lot thinner back then. I mean, not that I'm, I've gained a lot of weight, but, I got old. And it kind of shifted on me. I got to spend more time on the elliptical.
You quit playing men's city league basketball.
It's freaking You know what? I tried playing basketball. I tried doing full court. I took a breakaway, ran down the court. I tripped over my feet, and it looked like I head dived into second base. Looked like I was stealing second. I got up embarrassed, dusted myself off, and decided that, you know what? My mind wanted to get going. My body just wasn't, it was like an old car. You push on the gas, and a couple seconds later, it moves. That was like me and my body.
Hamstring or an Achilles.
I can't do it anymore. Yeah. Anyway, 1030 cross. What's a moving average crossover? For those of you that are brand new to this, and there might be a few of you in here, an average. Remember, that's a group of numbers that you put together and you sum it by the number of numbers you have. All right, so if you take 10 numbers, you add them up and divide by 10, you get the average of those 10. A moving average is when you're using the 10 most recent numbers and you're getting a new average every day, and you connect those dots, that becomes a moving average. A moving average crossover is when you use two moving averages of different lengths and you put them on the same chart. The short-term moving average, or what we call MA, is going to be more reactive than the long-term, and as the markets gyrate up and down, these two averages will cross. That's pretty much what the 1030 cross is, right? This is an example of 1030 cross on Tesla when it was going up. Imagine what the 1030 cross looks like on Tesla now, as it's been going down. It's been just as shocking to the downside. Now, George, in his infinite wisdom, as he did some testing, determined that he really liked the 10 and the 30-day simple moving average, what we call an SMA. SMAs you can find on literally any charting tool. If you can't find an SMA on a charting tool that you're using the wrong charting tool. It's literally, there's guys that have home pages that aren't even in the financial markets that have simple moving averages. So George's simple moving average strategy was actually quite simple. He was bullish when a 10-day crossed above a 30-day. He was bearish when the 10-day crossed below the 30-day. Now, we have moving averages in our tool set. And so if I were to show them to you real quick, I got them right over here in the option trader category. It's just a crossover tool. And so we have the moving average. You can put whatever average in, the long days, the short days. And we can set this into stock charts. We can actually look at stocks. We can look at calls, puts, and charts. And so if I were to just do a quick hit on the chart real quick, and let's just take a quick look here. I can actually put it on charts. And by putting it on a chart, it's just simple. I will go switch from none to simple moving average. I've got my 10 and my 30 there. Here's Snapchat. Why do I have Snapchat on here? I've actually been long Snapchat, and I was actually long options on Snapchat. And so Snapchat has been treating me good. So you can see here, Snap got a crossover back down here when it was about $11.25, and it has just gone nothing but widened out, as now Snap is above 14. It almost hit 15 today, right? That's a near 30% gain in what, less than 3 weeks, right? So that's Snapchat. But maybe you might want to see what it looks like on Tesla. TSLA. And by the way, I'm not going to spend too much time on this, guys, because all of you can do this. Take a look at this. So Tesla, I need to bring this out past 20 days. Let's look at 100 days on Tesla, because it's very interesting. Tesla got a buy signal today. Tesla hasn't been long since it was in the 300s. I mean, since it was in the way up here, down, 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 almost had a signal right here in this area. It didn't happen. And of course, Tesla got long today. So if you're a 1030 moving average person and you're trying to figure out where Tesla might be, and you use this indicator, I just gave you an idea. Tesla has got a 1030 moving average crossover today. Their earnings are not for 43 days, so you don't have to worry about earnings risk, at least for 43 days. Perhaps it might drive itself back up on auto drive. All right, maybe self-driving mode will push the stock higher, but I'm not done yet. All right, we know that moving averages allow us to cut our losses quick and let our profits run, because when you get caught in a stock that doesn't work well, moving averages, it just cuts you in and out, in and out, in and out. I'm trying to think of a stock that might follow that rule. Let's take a look at, how about, let me just throw JP Morgan in there. I don't know. I'm trying to think of a stock that might be a one that crisscrosses. Okay, over here it did. You know, I mean, you got long, you know, here's long, short, long. All right, so right in this area between 102 and about 106, crisscross. Then you got long right here around that 105 area, and we came all the way up to about 115 before actually 117 before dropping, and we got the crisscross to the short side. And look at this, it looks like it's almost ready to start going long again. All right, but that's an example of, you know, where it cuts your losses short. Let your profits run because it's a trend trading instrument. Now, Jay, are you ready for me to give the next question out to everyone?
Locked and loaded, yes, sir.
We know it works in bull and bear markets. The next question I have is, and we'll get to best practices in a moment. The question I have is this. Wow, I had the question and now I forgot it. It's been a long day, guys. My question is with moving averages. Okay, we know that everyone uses them in here. Does anyone use them? Here we go. This is the question I wanted to ask you. What percentage of time does the moving average typically work if you use it across all stocks? Anybody want to take a percentage? Give me a number. What percentage of time, statistically, do you expect moving averages will work, the moving average cross, if you're just using it on any given stock on any given day? Jay, what kind of numbers are we getting?
As low as 30 to 35% and as high as 70 to 80%. There's 195% around there.
All right, if you're using it now, if you're using it on a select group of stocks that you have back tested that work time and time again, yes, you can get it into that 70% or higher. But if you're just putting it on anything, the 30% number is the correct one. And the reason why is because this is a trend trading indicator. And what I mean by that is that you could get lose, 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 and then a winner that's a big winner, followed by lose, lose, small losers. All right. So when you look at trend trading systems, statistically, they are wrong more than they're right, but when they're right, they make more than they're wrong. Does everybody understand that? Right? That's what typical trend trading systems do. So how do you take something that when you're wrong more often, but when you're right, you make more money? And how do we flip that where you can be right more often and still make more money when you're right? That's by taking an indicator and turning it into a system. So with 1030 indicator, before I get into the system trading, if you use this right now and you're using it well, you probably know the 1030 indicator is really a 60 to 90 day option strategy, number one, because 1030s trending are not something that flip back and forth every couple weeks and you just make a ton of money. No, they're a trend trading system and they require you to be in the market longer. The longer you're in a 1030 that's working, the more you make. All right. Typically the losers happen quicker and the winners take longer. So that's why you want to look at those 60 to 90 day options. Now, how do we take this and turn it into a system? All right. Well, in order for your indicator to be a system, it must have these properties. Number one, it must be based on a repeatable, tradable pattern. Number two, it must be able to back test for reliability and consistency. And number three, you must be able to scan it for efficiency across all markets for future opportunities. What I mean by that is you don't want to, I remember I used to get these these charts. Jay, you've been around for a while. Here's another question. How many of you used to get those big graphs? They were called the option graphs by daily guides or daily graphs by option guides or something. Used to get them in the mail. I mean, this is old school stuff we're talking about, guys. Do you remember those things that used to come in the mail? They were really big and thick, and the sheets were almost transparent. You could see through them. And they'd send you these things, and it'd take you a week to go through them. There was just so many charts. And by the time, yeah, it was Value Line. That's right, Arthur. It was Value Line that sent those out. Wow, we are showing our age tonight. Remember those things? We used to get them. By the time you got done, the next one was in the mail. It took that long. Why I say that is because if you want to scan all, thousands of stocks, you want your computer to help you do it. That's the thing. That's the thing that has really helped me out the most, and it's helped a lot of us out. All right. But you want to don't get blurred between an indicator and a true rules-based trading strategy. All right, an indicator is just line of sight. A rules-based trading strategy is one you've tested over and over and over again, and you know when to get in and you know when to get out. All right, that's the big difference, guys. So back up, I went too far. So we can actually take moving average crossovers like the 1030, and we can go in and we can look at those based on things like what stock list we want to use, all right? What kind of slippage we like. What delta do we like on our options? What's the number of trades we want to look at? And what's the minimum days to expiration? And the more you lengthen that out, that also can cut your list out quite a bit too. Remember, I like the 60 to 90 day, but I'll put the minimum on there just to see more results, and then I'll tweak it from there. So those are things we can do. Right now, more recently, I was talking to a group about some recent signals. This was one in XL Energy, where we saw this. What was happening was the sells were coming, the sell to the buy was coming quick. So the entries looked better on the bullish side of XL. So you see this long move up and a short pullback, and then the next long move up and a short pullback. That was XL Energy, XEL. Here's another one, MSCI, same thing. You get a little short-term sell signal, and all it was just get ready for the next long, and the long came in. Intuit, same thing. Get a short little sell, long. All right, a little short pullback, and guess what? This one's gone long again too. Now, the question that I push to everybody is, can we improve upon the 1030? Going from what we call the 1030 to the triple threat trader. All right. Now I'm going to share with you the actual strategy, the triple threat strategy. I've never shared this before outside of our system, our trading system mastery members or partners. All right. But there's a lot more to it than this. But I want to share the code with you. All right. For those of you that came in tonight, you took time out. Who knows what you could have done tonight? I'm glad you're with me. So let me share with you what triple threat stands for. Triple means 3 moving averages. All right. But we're not crisscrossing all 3. We're still using the 1030, but we're going to use the 200-day moving average as a spotter. And the spotter basically says, is the market above the 200-day or is it below the 200-day? All right. So the 200-day is going to be a filter. And I want to kind of show you what I mean by that. All right. So think of a bullish cross for a moment. If you get a bullish cross, the stock better be above the 200-day moving average, because if it's below, I'm going to skip the trade. All right. So on any bullish cross where the 10 crosses above the 30, I want the stock to be above the 200-day moving average, because then and only then will I take the trade. I'm not just going to take it just because it crosses. Right. So if we look at Tesla once again, we could see, well, where is it? Now all of a sudden that Tesla trade may not be as good looking. And it isn't, because it's not above the 200-day moving average. But let me show you one it is. All right. Well, we did a back test on Google using this, and you can kind of see this is the 10. Now, this is the average trade profit. All right, during the test. When we triple threat this thing, the average trade profit went up 9 times. And so that's on a 10-year test to Google. Now, what I can do is I can test literally any stock. Here's a 5-year test on Home Depot. Now, all of you that are here tonight should have gotten an email from me late last week. all right, when I sent an email out on Home Depot and I said, here's a triple threat trade that's happening. Home Depot was a trade, and I'm going to move forward with one, that gave us a triple threat buy. There are 3 moving averages here. There's the 10, there's the 30, and then there's the 200. Now you see the cross right here where the 10 crosses below the 30, all right? We're above the 200-day moving average here. So this is not a short trade, although it would have been a great short trade because you had a cross here at 205, and then the cover was right down here around 180. But it didn't happen because it needed to be below the 200-day moving average to take a bearish trade, right? Likewise, here's a 200-day moving average cross to the upside. That didn't happen, but look at what did. In this case, Home Depot crosses above the 200-day moving average. So it's above it when the cross comes. So bam, there's a trade. All right, small profit, nothing big. All right, and then what happens last week? All right, when I sent you the email, Home Depot had another cross. Here's a 200-day moving average down here. Here's the stock price. Here's the cross where the 10 crosses above the 30, and here we are at around 197. We're 10 points higher now. We're up, and we closed at 207.48 on Home Depot today. The high was over 210, pulled back, but well, just kind of moving along very well there with that Home Depot trade. Okay, so I wanted to show you this because this is a longer term trade. This is something that when you see the bullish trade happen, you know, we expect to see that happening for that 60 to 90 days, especially the bullish trades. The bearish ones do happen a little quicker, but the bullish trades, we see that 60 to 90 day trade that's happening there. So that was Home Depot. And, you know, when we look back, we say, all right, well, spotting the opportunity is one thing, Tom. How do we create the low risk trade? Well, we talked about that the last couple weeks. Remember, you look at the price, the target price for your stock to move. And then you look at the target time that move should take place. And then you simply find an option trade between today's price and the target time, price and time. And so you're looking at Home Depot, looking at the shorter end, the 6-week option, the 45-day option was the July 19th. And so you look at that July 19th and you go, wow, okay, so this is going to happen between now and mid to end of July. So the July 19th options make sense. And then if you go back, and this is where we go back and we can actually test and we can say, wow, 71.91% of the time in the last 5 years, this has worked, all right? And so knowing that and looking at the moves that happened on Home Depot, that they were happening in the long moves were happening in that 70%, or I'm sorry, the $20 move, all right? That roughly 10 to 12%. And you look at where that trade came on, and you look and say, all right, that 220, 225 area looks really good. And I like the 220 to 225 area because the high was 215. You know, if we get above this high, you're going to get a lot of short sellers. They're going to be proven wrong. They're going to have to get out of that trade. That's going to push it up a little bit more. That's why I like the 220, 225 time frame or target on that trade, which I talked about as well. All right. But again, look for the target price. Look for your target time and find an option trade in between today's price and the target price or the target time. And we can do that. So, you know, I can take us back. So, you know, let's go in the Wayback Machine. Let's take ourselves back to Friday. So to do that, I'm just going to click on the date and I'm going to go to Friday the 14th. And now we're at the 14th and I'm going to go type in Home Depot, HD. And here we go. Here's Home Depot. And I'm going to move forward. I'm going to say, all right, Home Depot's already kind of on the move. I mean, the trade actually started a couple of days prior. It happened really last week. All right. I shared it with you at the end of the week. But if you take a look at this and you go, all right, target price, target time, let's go look at an option trade. And I can go to option chains. And I can go out here and say, all right, let's take a look at July 19 as an example. And here's Home Depot trading in the, Home Depot trading around that 205 area. And maybe I look at the 220, and this is this July 19th? Yeah. I mean, take a look here. You got the 210s are trading for $2.75. we don't have to do spread at all. Risk graph. This is a $275 option. All right. Where's it at today? It's a little bit higher. 68 bucks, not much, but again, we're looking at something that's going to take a little bit of time. If you think July doesn't have enough time, look out towards August. But there you go. If we get up into that area, the red zone, we can mouse over and see that we have potential profits of $802 on a risk of 275. That's more than double your money. All right. So that's our triple threat. I've got 3 triple threat trades that came up tonight. All right. 2 of them I like. One of them, earnings came out today. It's kind of too bad because this one, obviously, there already be, I mean, it's up 10 points in the overnight markets. But Xilinx is one where the 10 is crossed above the 30 and it's above the 200. All right. Boeing is one where the 10 crossed above the 30 and it's above the 200, and Adobe 1030 200. And this is pushing all the way out into September, the long term, based on what these 3 stocks have done in their past and the length of time that their bullish trades move. All right. So you have the code. You have the code for this. Again, you have the rules. You get an idea of not only how to spot the opportunity, but how we create the low risk trade. What you don't have is that list that we use, that list of stocks that we use, we're constantly updating that list. Okay, we're constantly back testing and finding those stocks that have just the best opportunity for continuing to move higher. And of course, the list for the stocks that plunge, that hit the plunge too. So at this point, before I move any farther, Jay, are there any popular questions that you see based on this? I mean, I spelled it out as simply as I possibly could, but I'm gonna defer to you.
If you address kind of assessing the price moves, and it was based off the amount of price move that the stock made the last time it had a crossover, or the last time
what we do is we go back and we look at that average move that's made percentage wise over the last several years. Okay, so that, I mean, you know, for those of you that are looking at it, you could look at a 1-year chart and you could kind of pinpoint it, you know, using the tool that the folks you know, used to use sextants. That's what it's called, Jay, where you're trying to get an idea, you know, in the water where you're going. You know, protractors, fingers. Use your thumb and your index finger, and you just get an idea. That's a good, really rudimentary way of doing it. All right, I have the ability to test all that, to back test, to find those things on the fly. And I want to talk about, you know, how you get that as well. But this is a really good way to at least start the process. All right. And so that's the point that I want to make. So, you know, then the other question is, what about bearish moves? And that's the big popular question I'm seeing too. So I'm gonna talk about that one, and then I've got one more, and then I'm gonna move forward. So about bearish moves. Bearish moves, you know, happen much faster. The bull takes the stairs, the bear takes the elevator, right? Or the bull walks up the stairs and the bear falls down the stairs. Bearish moves happen fast, so you got to capitalize on them fast. So you're really looking at about a 30-day move when you see a 1030 cross to the downside. All right. The other question that I see coming up is, how can do you incorporate this using things like the darknet signals or the money counter signals? And I say yes, no. All right, if it's darknet is its own technical trading strategy, and it is based on 30 days or around that 20-day average. So you don't want to mix a long-term strategy with a short-term strategy like darknet. But if you're looking at money counter and you see that it is a 30 trading day pattern, 30 trading days are really about 40 days when you add in the weekends and the holidays. So you are close. So you could utilize a 1030 cross with a money calendar. If you get a money calendar bull or money calendar bear, for those of you using our software, you know, you could put those in conjunction with each other, and that would be a great way to utilize that. All right. Now, One more I'll mention, and it has to do with earnings. All right. So earnings, I would either get out or step aside or get out of half of my position going into earnings, or I would avoid it until earnings are already done if earnings are coming up very, very close. All right. So if earnings are on top of you, like it was today with Adobe, wait till after the dust settles and then look to get in. All right. But if you got earnings that are maybe a month away, then you could ride the earnings tide as potentially these stocks may climb up into earnings, and just make sure you have a plan. And your plan isn't that you're just going to go through earnings, because that's where a lot of the risk lies. All right. How do I follow you? I see that question come up quite a bit. Let me get into that one, because that's one I want to answer. All right. And so and so guys, also I want to mention, we'll get into how I follow me in a minute, because this is another one that's popped up. With spreads, you do see profits. If you're sitting on an area where you've got a little bit of profits, like say it's Amazon, and you got an Amazon spread on, you're looking at this real time, which is the first thing I'd tell you is stop looking at your spreads real time. If you got a spread this expiring in July, stop looking at it real time. July is a month away. All right. Because what's going to happen is you're going to see it, and it's going to be up $200, and it's going to be down $200. It's going to be up 200, down 200. You know why? Because somebody's trading off the bid and someone's trading off the offer, and so you're caught in the slippage game. That's why with trades like Google and Amazon, whether they're triple threat trades or money counter trades or whatever it is that you're looking at utilizing, those are trades that are longer term. They need to mature over time. All right. So trading with me, running the trade with me here. I want to talk about this. So my two goals, first of all, we've had a fantastic 2019. All right. Across everything that I do, we got about 82% winners on our trades so far this year. All right. Dozens of double and triple digit returns. It's been a good year. All right. But what I want to do is I want to talk about the rest of 2019. And what I want to do is I do this once a year. My partners know this. They're involved in it with me. I want to teach a small group of traders what I call rules-based stock and option trading with up to 100% historical probability. These are high probability systems and strategies we're going to discuss that have those 100, 200, even 500% plus gains. And the other thing I want to do is I want to teach it, and I want to hand over my proprietary scans to my systems. All right. Give you the rules, the entries, the exits, even the codes for you to use. All right. So part of that is the triple threat trader, along with other strategies that we have too. And I want to talk about how you can join me for this once a year program that I do. And yes, I'm going to get to the $200,000 cryptocurrency piece as well, because that's part of this. So I'm doing my once a year system trading mastery program. All right. I only do it once a year. It's 2 months. I block out 2 months of my life. We're doing something that we've never done before. Okay. This is the 5th year we've done this. It's exciting. There are people that come back and repeat this class, and they don't do it for free. It's, I don't do free repeats in this. It's a small class. And we want to make sure that everybody gets the information, gets access to me, gets access to our programmers, gets access to each other. This series is going to begin on July 10th. I was going to start it on the 3rd, but the 3rd's too close to the 4th, and I just want to wait till after the holiday. So July 10th is a Wednesday. We will begin on a Wednesday, and I'm going to run through the month of August. It will be full of my favorite rules-based trading strategies. So what does this include? Well, again, July 10th, these are 90-minute classes minimum. They will be Wednesdays at 8 p.m. Eastern Time. I am also going to talk about Monday here in a moment, because we're adding in an additional class on Mondays. So July 10th and every Wednesday through the month of August, we've got minimum 90-minute classes Wednesday night, where I teach a new system, new entry and exits, give you the rules, give you the codes, give you the option strategies, and live trades. But we're also going to do a follow-up class on Mondays. So live Mondays with the markets for our system and trading mastery members. So in between the Wednesday classes, we're going to put our knowledge to the test. We're going to be trading live Mondays between 3 and 4 p.m. with the markets. So teach something on Wednesday, find some trades on Wednesday, come back and follow up and look at that, review that strategy again on Monday, looking at live trades on Monday. Okay. These are going to be recorded. All of the sessions are recorded, password protected, IP protected, and you will be allowed to view those recorded sessions for up to 12 months afterwards. That way you won't miss a thing. If you can't make a live event for whatever reason, you get the recording shortly after and you're able to pick up where you left off. All right, we give you the exact patterns, rules, and back tests, not only for the triple threat buy and sell, because what I did was I just touched on that, but I want to show you how we run the back test. I'm going to give you the stock lists that we find are the best for triple threat buy and sell. We also have a system we call Velocity Trader. This is a volume-based trading strategy, all right, based on huge amounts of volume that come into the marketplace, and where we are able to put our hand in and pull out trades that are profitable. I have an earnings trader strategy that I'm going to be talking about with you too. This is what we call our 24-hour earnings trader. This is typically a 1 to 5 day strategy. Most of the time, I call it 24 earnings because it's a 1-day strategy. We'll be teaching that to you. I will make sure that that comes in the height of earnings season, all right, because I want to make sure we have plenty of trading opportunities as we go into the earnings season, which will start around mid-July to mid-August. That's when the sweet spot happens. We get to that end of July. That's when this earnings trader really kicks in. I have a trading system called iSpy. This is an index trading strategy, 80% accuracy with 20 years back tested. This is a swing trading system, typically 5 days. We use weeklies on it. You will gain access to that. I have got cryptocurrency markets that I want to show you, some new stuff for 2019, and I also have smartphone tools and mobile apps that will allow you to use your smartphone or your iPad on all of this. Not just, you won't be held captive by the desktop. All right, you can use this stuff now on your smartphone. You can use it now on your iPad. That's part of it as well. Live market environments will be put into the test on Mondays from 3 to 4. These are the scans that we're going to include. The proprietary scans are going to be part of this too. So we're going to have triple threat, iSpy. We got triple threat bear. We have velocity bulls. We have velocity bears. We have our 24-hour earnings piece. I have an earnings bull and bear strategy I'm going to show you that is pre-earnings. So we got the pre-earnings strategy. We got the post-earnings strategy. I'm going to talk about Fly Trapper in a moment, which is a butterfly trapping program we have, as well as our money patterns too, which we'll be talking about as well. This program comes with access to my personal forum. That way you can talk to me and the other system mastery members, all right? So we have a program out there, and we really do concentrate on the strategies that we're discussing over the course of that week, so that if you have questions and you forget to ask them live, or you don't even know to ask them until after the live event's gone, well, that's what the personal forum is for, to ask me, ask my team, and ask each other, and we just create a great dialogue within our boards. All right, I got 3 triple bonuses that I have that I'm going to be offering for signing up right now. Number 1 is our software upgrade. So those of you that are new members that are thinking about joining us brand new, all right, I have something for you. This is brand new. In fact, we've got some new, not only new apps for the money calendar. You can see it right there. You got the money calendar app. All right. You have also the Darknet app. Okay, this is all I did was take a picture of this off my phone, and I condensed it down and blew it up so you can see it. Do you see that third one there? Nobody has that yet, but all of you that are part of the System Mastery Trading Program will get that third one, and I have a 4th right around the corner should also be done by the time we get into class or get to the end of class. And so that is the apps portion, but we have created the whole program to work on a smartphone or on an iPad. We're just now designing these point and click apps, and they're fantastic. They really are. We'll be teaching those as just a small part of the program. All right, so that's number. And so I say that because any of you that are brand new with us, I want to make sure you have access to our Complete Trader software package. All right, which includes all the data and the ability to do practically everything on our site outside of the proprietary scans we have. All right, so that's bonus number one. For the rest of 2019, I'm paying your data fees for the upgrade. Number two, so we have this Butterfly Mastery program, and I thought, you know what, I'm going to incorporate butterflies into my program because my protege, Christina Nugent, is no longer teaching with us. And it's not because she went anywhere else. She simply travels so much, she does not have time to teach the program. And so what I thought I would do is, rather than me try to teach something that she was so good at, I am going to include the most recent Butterfly Mastery recordings. All right, that will happen at the end of the session. You will then, when I'm done, graduation gift, boom, you're getting an additional 6-week Butterfly Mastery program, which also includes the Butterfly Trapper, the Fly Trapper scan, and that's also included for life, along with the other Trapper scans we have. So, number one, I'm paying for your data fees for Complete Trader and allowing you to access that through the rest of 2019. Number two, get the Butterfly Mastery program for free. And number three, which is something we've never done before, I did this for my partners, all right, earlier this year, and a few other members. So, as you may or may not know, I hold a lot of cryptocurrency. All right, so I've been lucky enough to get in. I mined cryptocurrency back in 2013 before most people even knew what it was. All right, and more recently, I've been getting involved in some of the altcoins, and I got myself a sizable chunk of a coin that is called a Moria token. And this is a cryptocurrency that's backed by a gold mine in Colorado. So actually, I was out in the gold mine last week in Colorado. I was there, and it's real. And this thing is, I can tell you, this has gone from a single-digit coin. This coin was less than $7. All right, when I started looking at it last year and getting involved in it and buying it, and today it was over $24, and it is just cruising along. So what I'm going to do is, not only will I be teaching a session in crypto markets, but 50 people who join up for System Mastery, I'm going to give each of these people 200 cryptocurrency tokens as another graduation gift for the class. That's a lot of money. That's a lot of coin.
I mean, sorry, I'm trying to unmute and get in here and do the math on my notepad here real quick as well.
Well, Jay,
so 200 coins.
What's 200 times 24?
I was just going to say, let me do my math with you here. 224, that's like what, 4,800? How much? Are we close to 4,000? What are we on there?
Yeah, I mean, so last time I checked, 200 times 24 was $4,800. I am actually going to be, going to be giving those cryptocurrency tokens, 200 to each of these folks, these next 50 people who sign up for this class.
All right.
And I can't guarantee where crypto is going to go. I mean, last year Bitcoin went from 19,000 down to 3, and now we're trading above 9 again. And it's I'm going to put a bold prediction out here. By the end of the year, I think Bitcoin is going to be back up above 10,000, above 15,000. I think we're going to see Bitcoin going back up close to its all-time high, because there are too many things happening in digital assets, I think, that are going to keep Bitcoin from going down again. I think that we saw the bottom. We saw the bottom for the year. I think the bottom's in. And so it's the altcoins. It's these alternative coins that are doing so well this year, and some of them I think are just going to be absolutely on fire.
So you haven't let the cat out of the bag on the price of this program yet, have you? Because I'm doing the math. I'm looking at what you're giving them as a bonus. All right,
I have not. I mean,
Okay.
and there's the Moria token as a 451 today. It was $24.48.
Well,
And
they're going to see what I figured out, so I'll keep my mouth shut.
I got 200,000, maybe a little bit more in crypto that I'm going to be dropping. As you know, so I think people got to be saying, okay, he's got more than $200,000 in this cryptocurrency. Yes, I do. I'll end it there. But I am going to be giving that as a bonus. I've never done this before. I will never do it again. All right. So, I'm doing this because we're now in our 5th year of System Mastery. It's gone very, very well. There are people in this room who have taken it again and again, are extremely happy with it. And so I thought, you know what? If this is my last year that I do the System Mastery program, I'm going to make sure we go out with a bang. And so here's the deal. The last thing I want to mention, money back guarantee. So if you join us and you sign up for week 1, which I'm going to go into details of the triple threat trading system, both the bullish and the bearish, because the bearish is a bit different. We're going to talk not only about the 1030 and the 200, but I'm going to show you the optimized version of this, which is a little different and is different from the bullish side to the bearish side. And I will provide you with the codes. I'll show you, we're even going to show you how to get in and use the lists that we use and literally look at the same scans that we're seeing. So it's, I teach the system. We go over it, we reiterate it, we talk about entries, exits, codes, etc. I give you the point and click, and then you literally are, it's almost like learning how to do math with a number 2 pencil and eraser, and then I give you the calculator afterwards. All right, because that's what we're doing each and every week. And so join us for week 1. If you decide it's not for you, then you know what? Just feel free to email us. We'll give you an instant refund. No harm, no foul. And so the price on this, and I actually put a little a thing out in the chat box. All right, and I already put that in the chat box, and there's people already signing up. And so let me just make sure that I put this in the Q&A box so that anybody that happened to miss it, I want to make sure you get this. All right. So I just put that out there. This session, the actual class, the whole program, guys, is an 8-week program, which is 15 webinars during those 8 weeks. All right, 15 live webinars, 12 months recorded sessions, our mastery forum and live support, complete trader software with the latest scans and apps. We got 6-week butterfly mastery, which is going to be the bonus on top. I'm doing 200 Moria cryptocurrency tokens as a graduation present. Oh, also keep in mind that I'm paying for all their sign up that are new. I'm going to pay for that software data feed for you for the rest of the year. And this is all backed by a risk-free money-back guarantee. The regular price on this package is $13,785. We are asking for a one-time payment of $39.90. 50 spots available today. 70% off the regular pricing.
Trying to get.
Yeah, once they're gone, they're gone. And like I said, I can't. The tokens are a gift. They're a bonus gift. Yeah, that's what they're trading at. That's the price. That's
what I was trying to interrupt you with. You're paying these guys to take this class.
Well, I don't know if I'd go that far.
Maybe they see it a different way, but I'm like looking at the coins you're giving them. The price that it's at, what it'll be at 3 years, you said you can't guarantee. But right now, the value of the coin alone is paying for this course.
Yeah, right now, as of 9:05, it's at $24.01. So it's dropped off a little bit, but that's what Bitcoin does. Bitcoin, Ethereum, they're all off. But still, a $24 token times 200. Last time I checked the math is $4,800. So I'm really trying to do everything that I possibly can to get people to get off of the hopium style trading and get into trading a rules-based strategy. This is the best way I can do it. This is the absolute best offer that you will ever see from me. Once it's gone, it's gone. And I can tell you guys, by Sunday night, if these aren't filled up, they're gone anyway. I'm putting an expiration date on this. Sunday at midnight, this offer comes off the table as well. If you're interested in this, click on that link I just put in the chat box, and you're going to be taken to a special page, which you cannot Google and find. It's not out there, all right? This is the only way you're going to get it. It's tomgentile.com/19tom, and you'll see the System Mastery Series, begins on July 10th, talks about everything you see here. What it does not show in here are the 200 Moria tokens, because after the 50 folks that sign up, after the end of this week, they're gone. I am not giving away any more than what I've got there. In fact, we are going to be offering this class outside to one of our affiliates. They're not getting the tokens. The tokens are only to the Optionetic students who have listened to and been part of our summer series here that act on this offer. All right, so you see everything you have here. You take a look, and you can see here down at the bottom, it shows you the price, shows your today's price, everything that includes, 50 spots available. Click on the orange button. Once you do that, you're going to come to a terms of service. Read the terms of service. Click on I agree if you agree to the terms of service. Once you do that, you'll come to an area where you can log in, or if you go to, if you don't have a PayPal account, just go in and click on the guest checkout, pay by debit or credit card, and you can go in and you can pay with a American Express, Visa, Discover, or MasterCard. Once you've paid, and we get receipt of your payment, you will immediately get a welcome email, which includes registration for the entire seminar, all right, as well as other details that you're going to want to know about prior to us starting on July 10th. And again, the money back guarantee is in there. And if you join us for week 1, and if you just think it's not for you, just email us. We'll give you a fast, prompt, and full refund. Jay, any final questions as we end this session and end this summer series?
Just, I'm reiterating where everybody can find the chat box in the controls panel to the right. You open up the drop-down window next to the word chat. The window opens, the link is there. Otherwise, hit us up at support@tomgentile.com.
Yeah, and let me just, let me do one more thing too, because I want to make sure everybody has access to this as quick as they possibly can. Right here, forget all this HTTP stuff. All you got to do is just type in, because we have it correct, where you can do either one. There we go. It is www.tomgentile.com/19TOM. www.tomgentile.com/19tom. If you go there and you type that into your address box at the top, it will take you to this page, and it'll show it right up here, www.tomgentile.com/19tom, and you can read through, gives you all the details. What you won't see on here is the coins, but if you are one of those 50 folks, those first 50 folks that join, all right, then you will get those coins. Those will be granted to you at the end of August. And guess what? By the way, this coin pays a royalty, and the next royalty is on September 1st. So you're going to get the royalty right after you get the coins. I can't make it any better than that. All right, guys. Oh, and I told Jay this, and Jay knows this, and I plan on donating a lot of these coins to charity too. I am planning on making a substantial donation to charity at the end of the year because I've just done so well, on this and altcoins. So I got to share that wealth with some folks that really need it. But I'm offering some of this to you, to those of you out there that are serious about becoming system traders. I hope you join me. Again, the recording will be out to you later tonight. The offer is there. Take it or leave it. It's the best offer you're going to see from me. It's the best offer that I've given out in 5 years when you look at all the bonuses that come with it. All right, guys. Hey, thank you very much. Jay, I appreciate your help, buddy, running that back of the room. And guys, like I said, have the recording out to you real soon. Thanks again. Enjoy the rest of your summer. And for those of you that are joining me, get ready, because we're going to hit it hard starting July 10th. Thanks again. See you guys. Bye now.
See ya, Tom.